Hi, I'm Cody Dertow with Edward Jones Investments, and I'm glad to be here with you today to discuss the investment market and how you can use that to your benefit. When it comes to retirement, there are many options, and sometimes your options are dictated by the type of employment that you have, whether you work for a hospital or maybe a bank or a school district or a Fortune 500 company, or if you're self-employed or run your own business, or perhaps a family business. I get a lot of questions about what retirement plan is best for me. Well, that answer depends on your scenario. For example, if I'm working for a bank, more than likely, I have a 401k. And I should use that vehicle to help save money for my retirement. But that's not the only vehicle that I have. There are also individual retirement accounts, or IRAs. And there are traditional IRAs and Roth IRAs that an individual can take advantage of. If I'm self-employed or perhaps run my own business, so maybe I'm a 1099 type employee, then there are other options available to me as well. Those options include what's known as a SEP IRA or a simple IRA, or perhaps even an owner-only 401k. To give you a little bit of detail on these various accounts, the two most common types of IRAs are that Roth and that traditional that I mentioned a moment ago. The traditional IRA means that all of the earnings in the account are pre-tax. And down the road, when you're retired, you'll have what's called a required minimum distribution from that account every year. The Roth IRA, on the other hand, accumulates its earnings eventually tax-free. Once you turn age 59 and a half and have had that account open for at least 5 years after that first deposit, both of those things have to come together, all the money in that account, generally speaking, is tax-free. So when we're looking at retirement planning, we look at what accounts, based on your income, your availability to contribute, your tax status, are best for you to take advantage of. Now, the investments in both of those IRAs can be the same: stocks, bonds, mutual funds, ETFs. That's part of our job to help build that mix for you. But the investments between account A and account B can be the same depending on your goal, or they need to be different depending on your age, your risk tolerance, and your goal as well. With those traditional and Roth IRAs, if you're under age 50, you can contribute up to $6,000 per year. That year starts January 1st of year X and runs through the tax filing deadline of the next year. So for example, as we head into 2021, your 2021 contribution clock would run January 1st through April 15th of 2022. Now, when it comes to items like the SEPs and the owner-only 401ks and vehicles like that for self-employed or 1099 type persons, the rules are a little different. In the United States today, in a 401k, you can save up to $19,500 of your own contributions. The same applies to an owner-only K. So let's assume that I own a business and I'm the only employee and I need to save for my own retirement. The owner K could be an option, and I can help you set that up. We would discuss the plan options available, the investments available, and you would save money tax deferred in that account. Now, tax deferred would be more like a traditional IRA style, but you could also do Roth contributions as well, meaning part of your money at a minimum would eventually be tax-free because it was tax-free when it went into the account because you had already been taxed on it once. If you look at doing something like a SEP IRA, for example, let's say you own a restaurant and you're very successful and you have a lot of events every year and you have a lot of cash flow that you might direct into a bank account to save. And you want to say, hey, Cody, how do I make more money on this account? Well, again, this is a retirement account. And so there are rules and expectations for that. But if you have a goal or a desire to save money for your own retirement, this would be an option for you. In a SEP IRA, currently, you're able to contribute up to $57,000 or the lesser of 25% of your annual gross compensation. So if you make $100,000 one year, your cap would be $25,000 that you could put into that account out of pocket, so to speak, of your own money and invest that for your own retirement goal. Again, the investments within it, stocks, mutual funds, etc., remain the same as the other IRA accounts I mentioned, but the mix of those investments are what we talk about as a team with you to figure out what's best for you and your account, the time horizon you have to invest your money to reach your goals, and what that ultimate goal is. Sometimes I get the question on which of those plans are best for me because of the business that I own. Hey, I have 5 employees. Hey, I have 50 employees. Which plan should I choose? Well, again, that's where we sit down and have that consultative approach to really look at your business, how it's structured. Are you an LLC? Are you an S Corp, etc.? And figure out the plan that's best for you. Because sometimes the plans may dictate the size of the employer that they can help. So in some cases, the plan might only be right for that business owner and maybe his or her spouse. Where in other cases, you might need a different plan if you have a larger employee base. And so for example, let's say I own a company, I have 125 employees. In that case, we're going to be looking at, generally speaking, a true traditional, if you would, 401k styled type retirement plan for that business, wherein all of the employees could be eligible to participate in that plan because of the various rules set by the government and the IRS, but also the owner of that business and those eligibility rules as well. I've had people ask me, well, my business really isn't very big. Should I even worry about creating my own retirement plan? And the answer is yes, if that's a goal that is important to you. Being able to save money and invest money in a tax-advantaged way that will help you reach your financial goals, whether that's retirement and buying that lake house, for example, are important. And part of my job is to help you and those you know and care about do that. So if you have a question about your business and your retirement plan options, or if the existing plan that you have is working the way it should, if you're getting the types of returns that are reasonable for you to expect, if you're having the tax advantages that you should have with the plan in your business, call me and let's talk about that. Consultations are free, and we will take the time that's necessary to sit down, go through your individual scenario, and figure out the plan that's best for you and those you care about.